Hello dear students, fourth problem we are working in this fund flow statement. This problem, if you can understand, if you can work out, I can say you are perfect in fund flow statement. Such an important problem I have taken with lot of adjustments. Don't worry, you can understand easily, nothing to worry, because my teaching is such a easy way anyone can understand. Anyway, coming to the problem. So this is the problem given 2016-17 2 years balance sheets are there. First you have to decide where does it comes. Schedule of changes in working capital, adjusted P&L account or fund flow statement. Where does it comes? Now we'll see each and every transaction. Goodwill. Goodwill, it will be in the adjusted profit and loss account. Return of goodwill. We'll write it on the debit side. Next, land and buildings and plant. These two are fixed asset. It comes in the fund flow statement. Current assets, schedule of changes in working capital. Next, coming to the liability side, share capital, preference share capital, these two will comes in the fund flow statement. Reserve, general reserve, we'll write it in the adjusted profit and loss account debit side. Transfer of general reserve. Next, profit and loss account, this is the opening and closing balance of the adjusted profit and loss account. Proposed dividend, provision for taxation, these two are very important. Please remember, proposed dividend and provision for tax, these two, if at all any adjustment is not there related to this, you can treat it as a current liability. No adjustment. In this problem we have adjustment, so we will not treat it as a current liability. Means we have to open the account because adjustment is there. So this is not right now, it's not current liability because adjustment is there. Just remember up to here now only. Next one, creditors. Creditors is current liability. It comes in the schedule of changes in working capital. Bills payable, there is no space, I have written here. Bills payable to 20,000 and 16,000. This is also current liability. Right? Now coming to the adjustments. First one is depreciation 10,000 and 20,000 on plant and machinery, land and machinery. 10,000 is for plant and machinery. 20,000 is for land and building. Depreciation. If depreciation is given in the adjustments, what we have to do? In the previous third problem we have done it very clearly. Once again we are going to work out. Whenever depreciation is given, what we have to do? We have to open the asset account. Asset account we have to open. Okay. Now anyway, this is, so the impact will be 2 times. So this comes in the first adjusted P&L account debit side and another time asset account credit side. The impact of depreciation, if it is given in the adjustment, 2 times it comes. Adjusted P&L account debit side, asset account credit side. Next one, a dividend of 2,000, income tax of 35,000 has to be paid. Both has to be paid. Both will comes in the same account. You have to open the account and also it comes in the adjusted P&L account and also in the fund flow statement. Remember up to here now only, simple thing, adjusted P&L account debit side, fund flow statement it comes. Depreciation doesn't comes in the fund flow statement. Where does it comes? It comes in the adjusted P&L account and asset account only. So now what we have to do is, first thing is that schedule of changes in working capital. This is simple, you know it very well. So I have already opened it, schedule of changes in working capital. So total current assets we have 2,82,000, 3,57,000. 2,82,000, 3,57,000. Increase of 75,000 written. Next, after that current liabilities we have creditors and bills payable. Creditors, bills payable. I have written here creditors 55,000, 83,000. Increase of 28,000. Bills payable is here 20,000, 16,000. 20,000, 16,000. So there is a creditors is here increasing. Increasing means we are writing it as a decreasing column. And bills payable is decreasing. Decreasing means increasing column we have written. Total working capital. How do we get working capital? 2,82,000 minus these two. So you got the working capital 2,07,000. And here 3,57,000 minus 83 minus 16,000. Current assets minus current liabilities. You got working capital 2,58,000. So there is an increase. Net increase in working capital 51,000. Increase no, so we'll write it in the decrease column. And it's tallying increase or decrease. Both the sides we are getting 79,000, means this is correct. Schedule of changes in working capital. Once if it is completed, now we'll open 4 accounts. One is depreciation. Whenever depreciation is given, we have to open the asset account. 2 depreciations are there. One is on plant and machinery, another one is on land and buildings. Both the assets account we have to open. Now I already opened it, plant and machinery and land and buildings. To open the plant and machinery account, opening and closing balances we must know. Opening balance is 80,000. It's written here. Opening balance. Closing balance is here 2 lakh. 2 lakh is written. And depreciation will be on the credit side. Depreciation on plant and machinery is 10,000. 10,000 also written here. Opening balance is 80,000. Closing is total together 2,10,000. It means it's increasing. Whenever it's increasing, it's a purchase. So we are writing purchase of how much? Difference. 80,000 minus, 2,10,000 minus 80,000. The difference is 1,30,000. It's a purchase. It comes, this 1,30,000 comes in the fund flow statement. In the same way, land and building also I have opened. Opening balance is here, land and buildings 2 lakh. 2 lakh is written here. Next closing balance is 1,70,000. 1,70,000 is written. Next depreciation of how much? 20,000. 20,000 is written. 2 lakh minus 2 lakh is opening and closing is 1,90,000. Difference 10,000 comes on the credit side. Opening is 2 lakh, closing is 1,90,000. It's decreasing. Whenever it's decreasing, it's a sale. So we are writing by bank in brackets sale. Here purchase. So like we have opened these 2 accounts, assets account. Why we have opened? Depreciation is given in the adjustment. Otherwise not required to open the accounts. Next, coming to the proposed dividend and provision tax. These 2 also adjustment is given. That is why we are opening these 2 accounts, proposed dividend, income tax. Otherwise not required. Now how to open proposed dividend account? Proposed dividend account means it's in the liability side. To open any liability account, please remember opening balance will be on the credit side. Closing balance debit side. Now proposed dividend, where it is here, 42,000 opening balance. Closing balance 50,000. Opening closing balance are given. And in adjustments it's given dividend is 20,000 paid. Paid means debit side it comes. So debit side it's written. Now balance amount, debit side is 70,000 total. Credit side 42. Difference is 28,000, balancing figure. This amount we are going to transfer into the adjusted P&L account. Adjusted P&L account, this amount we are going to write, not this one directly. Directly we are not going to write because we have opened the account. In the same fashion, second one, that is income tax account. Income tax account. Opening balance is how much income tax? Provision for tax 40,000 opening balance. This is opening balance. Closing balance is 50,000. 50,000. And in adjustments, income tax 35 has to paid. Where will pay? We'll write it on the debit side only. 35,000 return. Now debit side is 85,000. Credit side is 40,000. Difference is 45,000. Will be sending to the adjusted P&L account. Adjusted P&L account. That's it. So this is the rough work we have done. Everything comes in the working notes. Working notes, first point, second point, third one and fourth one. Once everything is clear, then we'll go for the adjusted P&L account. I'll try to work out here only adjusted P&L account. For this opening balance is here, profit and loss. Opening balance is 30,000. By balance brought down. By balance brought down 30,000. And goodwill, return of goodwill. Goodwill is how much? This is 15,000, 25,000 difference. 25,000. From the balance sheet, what else we want to take? Let us take first. So goodwill is over. Now next on the liability side, general reserve. General reserve, transfer of general reserve, it comes in the debit side now. So general reserve difference is 30,000. General reserve 30,000. Anything else to write? Over. Now coming to the depreciation. Depreciation is here 10,000 and 20,000. Both will comes in the adjusted P&L account. 2. Depreciation on, first one is here plant and machinery. Plant and machinery 10,000. Next, depreciation on land and buildings. How much it is? 20,000. 20,000. Then after that, dividend of this dividend and income tax account already we have opened. Dividend and income tax account. As per this, whatever balance we got, this is we are going to transfer to the adjusted P&L account. So proposed dividend, how much is there? 28,000. It's on the credit side. Credit to debit to proposed dividend. Proposed dividend 28,000. In the same income tax is 45,000 balancing figure. 45,000 credit means here debit side. Income tax 45,000. Anything else to write? Depreciation we have taken, dividend, income tax also we have taken. If you see this adjusted profit and loss account, we have written everything. So what else is left? Opening balance is there. Closing balance we have to write. Adjusted profit and loss account closing balance is 48,000. Balance carried down 48,000. Then we'll close it, and if you see the balance 25,000 plus 30,000, 40,000, 40, 50, 60, 60,000 plus 28,000 plus 45,000 plus 48,000, 2,06,000. This 2,06,000 minus 30,000 minus 30,000 comes to 1,76,000. So adjusted P&L account we got 1,76,000. Now it's very easy to prepare. I have already cleared the board. So to prepare the funds flow statement, here we'll write sources and application. So first we'll check the balance sheet. Goodwill already we have taken. Land and building, we have to see this account. As per this account, whether we are selling or purchasing, we have to take it. We don't consider directly because we have opened the account. Now here land and building is how much sold. We have sold. Sold means it's a source. Sold for 10,000. Sale of land and building. How much? 10,000. In the same way, plant account also we have opened, plant and machinery. Here it's a purchase. Purchasing means it's a application. Purchase of plant and machinery. 1,30,000. Next, that's over. Now credit side, share capital. Share capital value is here increasing. Increasing means issue. Issue means it's a source. Whenever we are increasing, we get funds. It's a source. So we'll say it as a issue of share capital. How much we are issuing? 1 lakh shares we are issuing. Then after that, preference share capital. Preference share capital is decreasing. Decreasing means redemption. Redemption means paying it off. Whenever we are paying, whenever we are going for redemption, it's an application. Funds coming is source. Payment is application. So it's decreasing means redemption. Redemption of preference share capital. Application. Redemption of preference share capital. How much we are redempting? 50,000. General reserve already taken into the adjusted P&L account. Profit and loss account also taken. Proposed dividend provision also taken. Creditors bills payable is related to the current liability. That's already taken. Now coming to the adjustments, depreciation is already taken into the adjusted P&L account and also into the asset account. That impact will be here. I have told you. Adjusted P&L account and asset account. Now dividend and income tax, this has to be paid 2 times. It effect will be one time is in the adjusted P&L account, another time in the fund flow statement. Payment, now this is, so payment will be as a, will be writing it as a application. So payment of dividend, how much? 20,000. In the same way, payment of income tax. Income tax 35,000. Everything is written. Now the impact of schedule of changes in working capital. We got already net increase in working capital 51,000. We'll write here net increase in working capital. Working capital 51,000. And adjusted P&L account will take funds from operation. This is funds from operations. This is balancing figure. Funds from operations always from adjusted P&L account to fund flow statement as a source. So funds from operations. How much it is? 1,76,000. That's all. Will total up 1,76,000 means 2,76,000 plus 2,86,000. This side also it should be 2,86,000. If you check it, 6 it is. This is 10, 15, 8. 8 plus 1, 2,86,000. Yes, it's tallying. Means the problem is correct whenever it's tallying. Simple, nothing to worry. Let me give you a recap. Whenever this balance sheet is given, we'll identify where does it comes. Is it going to come in adjusted P&L account, schedule of changes in working capital, or fund flow statement? That we have to identify. Then see the adjustment. Depreciation is the one adjustment given. This is, we know, in the previous class also we have done. Whenever depreciation is given in the adjustment, we have to open the account, asset account. Open the asset account. For example, opening balance, closing balance will write, depreciation will write, the balance whatever it may be sale or purchase. So that will be deciding that impact we are taking into the fund flow statement. Second adjustment is dividend and income tax paid. Always remember proposed dividend and provision for tax. It will be given in the balance sheet as well as in adjustment. If both the sides when it is given, please consider it as a non-current liability and open the accounts as we have opened proposed dividend and income tax account. Both the accounts you open it. The balance amount transfer it to the adjusted P&L account as we have done. This is the balance amount we got it transferred. If no adjustment related to the provision for tax and the proposed dividend, no adjustment, this is not given. If not given, simple treat it as a current liability, no headache. If this is given, you have to open the accounts, right? And as usual, after opening 4 accounts, land and buildings, machinery account, proposed dividend and income tax account. After opening these accounts, we have prepared adjusted P&L account. Very important thing is that adjusted P&L account will start with opening balance. After writing all the transactions, don't forget to write this closing balance. Generally, many people will do the same mistake. Don't forget to write the closing balance. Then after preparing this, you'll get funds from operations. Once if you get funds from operations, you are free to prepare fund flow statement. Sources, application, simple. The problem is tallying? Yes. Fund flow statement is one of the best and easiest chapter once if you understand. Understanding is very much important. 4 problems we have done. Before these 4 problems, I taught you introduction of fund flow statement, schedule of changes in working capital, separately format I taught you, problem we have done, adjusted profit and loss account also format and problem, and fund flow statement format and directly problem. Like we have gone step by step. Total fund flow statement chapter is given in the description box, and also other chapters and other subjects links are there in the description box. Please watch it. Now fund flow statement is completed. Next I am going to start cash flow statement. I know many people are waiting. If you understand this, cash flow is damn easy. Easily you can understand. Only the thing is you have to understand the concept, what it is. Simple, you can easily do it. So now what you do is take a book, work out this problem, and also from the textbook as many as problems you try to work out roughly and also in fair notes. It will be easy because practice makes you perfect. So please practice well. Wish you good luck. Write your exams with lot of confidence. Take care. Good luck.